let's talk about taxation. I believe that's what most people are interested in, at least in this audience. So like I told you before, the only authoritative guidance issued by the IRS is this Notice 2014-21. I think you can click the link, or you can just Google, and you can see this notice. It's like a Q&A format, which is very simple to understand, nothing complicated. And so the main takeaway on this notice is that the cryptocurrencies are treated as property when it comes to the IRS rulings. So I think I highly recommend that you guys read the Notice 2014-21. And so if you go to the next slide. So the easiest way to understand the taxation, or like how to advise your client, is by figuring out the uses of cryptocurrencies. So the number one user that you're going to come across in your field of work is cryptocurrency investors. So these are the people who buy cryptocurrencies and other tokens just for speculative purposes. They just buy low and sell high. And so going with the property definition, gains and losses are capital in nature, not ordinary. And the most important thing is that your clients will not get a 1099-B from an exchange, from a cryptocurrency exchange. In rare cases, they will get a Form 1099-K, as indicated. You can see a picture over there. So some exchanges, US-based exchanges, issue 1099-Ks if gross proceeds are more than $20,000 and more than 200 transactions in the calendar year. So you might see 1099-K in rare instances, but note that in the 1099-K you can only see the proceeds. It doesn't show you the cost basis. So in order to figure out the cost basis, you had to do some manual calculations, or you had to go through a program like BitTaxer, because you will see how hard it is to calculate cost basis for number of transactions with fractional purchases and sellings. FIFO is the default, but you can use LIFO, and you can also use specific identification method if you want to optimize your capital gains and taxes. And I highly recommend using something like BitTaxer, especially if you're a practitioner, because Brandon will demonstrate the product, and you will see how easy it is to calculate the basis, and you will see like how impractical it is to calculate basis manually, because there's so many transactions in these reports. And I've in the later slides, I will also show you the type of report that you're gonna get from the exchanges. So with that said, let's go through some examples. So example 1 through 3 are very simple. I just put it there just so you can understand the basics. But the example 4 is what you're going to see in the real life. So let's go to, so the example 1 through 3, I'm not going to go into details because it's pretty self-explanatory. It's just about figuring out the difference between the proceeds and the cost basis. And depending on the holding period, it's going to get treated as either short-term capital gains or losses, or long-term capital gains or losses. But let's focus on example 4. And if you understand this example, you pretty much understand the basic theory behind calculating gains and losses, and you can apply this theory to anything. So on October 1st, 2018, Bob purchased 1 Bitcoin for $5,000, and that's the original cost basis. And on the same month, 20th, the market went up, so the 1 Bitcoin is now worth 10,000. So he has 100% gain on initial investment. And on the same day, Ethereum, another type of cryptocurrency, went down in price. So Bob wants to buy Ethereum using the appreciated Bitcoin that he purchased on October 1st. So it's an easy 3-step calculation. So step 1 is calculate the value of the property received. Pretty easy. So you got 20 Ethereum. So 20 multiplied by $200. $200 is the value of Ethereum on October 20th. So the value of the property received is $4,000. And step 2, calculate the number of original tokens spent to get the new token. Um, so basically, to get 20 Ethereum, Bob had to spend zero point 0.4 Bitcoin. It's calculated by 4,000, which is coming from step one, divided by 10,000. That's the fair market value of the Bitcoin on the date that he purchased Ethereum. And step three is calculating the capital gains and losses. The cost basis of the Bitcoin sold is 2,000. It's 0.4 multiplied by 5,000. Remember that 5,000 is coming from October 1st. And proceeds of the Bitcoin sold is 4,000. So you sold 0.4. And when you sold that 0.4 on October 20th, one Bitcoin was valued at 10,000. And then the gain is 2,000, 4,000 minus 2,000. So it's a really simple calculation. It's not rocket science, but then again, in the real world, the situation is much harder than it appears over here. So let's go to the next slide. So the next slide pretty much continues it's the same example that we have been following, but in the bottom now you can see the Bitcoin remaining at hand now is 0.6 because you sold 0.4 to get Ethereum, and then the cost basis of the Bitcoin at hand and cost basis of the 20 Ethereum at hand. So these are the type of reports that you're gonna see you're gonna see from different exchanges. And if you look at closely, it's nothing like the example I showed you. You know, there's so much activity, and activity is tracked by the second. And if you're selling, let's say, for example, 5 Bitcoin, it's rarely it's going to get sold at 5 whole units. There's going to be so much fractional units, and then you have to figure out which unit came from which lot, and so much administrative burden. So this is the reason why it's highly recommended that you use something like BitTaxer, because the program helps you figure out everything, and you don't have to spend time on administrative stuff that doesn't really add value to your client. So let's move on to the next slide. So once you figure out the gains and losses, it's like as you guys already know, it goes to Form 8949. You had to check Part 1 Box C, short term, or if it's long term, not reported to you on 1099B. And so that's how capital gains and losses are calculated. It's pretty easy. However, in the real world, as I showed you, it's a lot of administrative work, and it doesn't really add value to your end client. So that's where softwares like BitTaxer comes in very handy.